Ladies and gentlemen, good evening and welcome to the second earnings call of Asarfi Hospital Limited for the financial year 2025 and 2026. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harinder Singh, Chief Financial Officer of Asarfi Hospital Limited. Thank you, and over to you, sir.
Good afternoon, everyone, and a very warm welcome to the second earnings call of Asarfi Hospital Limited for the financial year 2025-26. I am Harinder Singh, CFO of the company, and sincerely thank you all for taking time to join us today. Our earnings presentation for the first half ended 30th September has already been uploaded on the stock exchange platform as well as on our official website www.asarfi.in. We hope you have had an opportunity to review the same. As a part of our commitment and transparency, we have voluntarily undertaken quarterly reporting, even though the SME platform required disclosure only on half-yearly basis. Before we begin, I would like to remind you that today's discussion may include forward-looking statements which are subject to certain risks and uncertainties. For the detailed disclaimer, please refer to the slide number 26 of the investor's presentation. Let me start with a brief overview of our journey and recent developments. Asarfi Hospital has been serving to the people of Dhanbad and the surrounding region for around 2 decades. From our humble beginning in 2005, we have grown into one of the largest super specialty healthcare providers in the eastern region. Today, we operate 2 hospitals in Dhanbad, and with a combined bed capacity of 330, our flagship super specialty hospital in Baramuri and the recently operationalized Asarfi Cancer Institute at Ranguni, Dhanbad, which is just 4 kilometers away from here. Our super specialty hospital, operational since 2008, continue to be trusted name in Jharkhand and offering 23 plus specialized departments including cardiology, neurosciences, general medicine, pediatrics, neonatology, orthopedics, and many more. In the first half of 2026, this unit achieved a healthy occupancy rate of 64%, serving over 12,300 inpatients and more than 72,000 outpatients. Our cancer hospital, operational since Q1 financial year 2025, is the first dedicated comprehensive cancer care facility in Dhanbad and one of the only 3 cancer hospitals in the state of Jharkhand. Built in an area of 9.55 acre campus, the hospital currently operates with 65 beds and houses Jharkhand's first and most advanced variant TrueBeam linear accelerator along with the Siemens 64 slice PET CT scan. The facility is witnessing strong traction, with occupancy improving from 26% to 44% in first half. The ARPOB has more than doubled to 41,401 rupees. Now we are moving on to our consolidated financial performance of the first half of the year. Revenue from operation has grew from 50% year-on-year basis to 80.6 crores compared to 53 crores in the first half of the last year. EBITDA stood at 15.86 crore, reflecting 38% year-on-year growth with a stable EBITDA margin of 20%. EBIT has increased by 75% year-on-year to 12.13 crores, while the PAT has rose by 70% on year-on-year basis to 7.32 crores, with PAT margin improving to 9%. ARPOB of the super specialty hospital has improved to 19,839, while the cancer hospital has recorded a sharp increase in ARPOB to 41,401 rupees. Inpatient volume has more than doubled to 12,361 in first half, and the outpatient volume has grew to 72,317, up from 54,000 in the last period. We are also pleased to share that in the May of this year, we have signed a strategic MOU with Gleneagles Hospital, Chennai, to establish Jharkhand's multi-organ transplant unit. This collaboration will bring world-class transplant services to this part of the country, including heart, lung transplant, liver transplant, kidney transplant, and bone marrow transplant under one roof, significantly reducing patient dependency on the metro cities for advanced care. Looking ahead, we remain focused on our vision for 2027, expanding total bed capacity to 500, achieving 200 plus crores in revenue, and maintaining a healthy EBITDA margin of 25% to 27% and PAT margin of 13 to 15%. Our expansion roadmap includes the scaling of the cancer hospital to 150 beds with a minimum capex requirement. Since all required infrastructure is already in place, we would like to launch a bone marrow transplant unit next year and operationalizing our education vertical with 600 plus capacity hostel and healthcare management institute in Ranchi. Lastly, as a part of our continued commitment to the community health, we have conducted 154 plus health camps, 103 health talks, and produced 154 health awareness videos across 10 districts. In addition, we have reached and screened over 8,069 cancer patients across Jharkhand in the past 6 months. With that, I now hand over the call to the moderator to open the floor for your questions. Thank you once again for your continued support and trust in Asarfi Hospital. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Murtaza from Pinpoint X Capital. Please go ahead.
Hi, sir. Good afternoon. Congratulations on a good set of numbers, and I truly appreciate your effort to actually showing us results on a quarterly basis. Totally appreciate that fact. I just had a couple of questions. Would totally love your insights on it. First of all, we had a very solid growth on the top line of a 50% year on year. However, when I see that trend in accordance with our trade receivables, the trade receivables have grown 67% year on year. So could you please share some insights, like are trade receivables not growing in proportion with the top line?
Sir, thank you very much. We have identified that trade receivables are cause of concern, not only for our investors, but also for us. We are trying to benchmark with the hospitals running around Dhanbad, or like we are benchmarking against the hospitals running in Ranchi and Calcutta. And we are trying to streamline and take necessary actions to bring down. But as you know that trade receivables are, our business is with government agencies, and sometimes fund problem with certain companies like Indian Railway we are serving, and last month they said that our budget has expired and they have applied for fresh fund allocation. So that is the reason as to why this trade receivable is slightly on the higher side. And second main reason is because this cancer hospital in this area is new. Initially, people have trust issues, so cash proportion in the cancer hospital remains very low, and we are dependent mainly on government business, and that is why it is little bit appears as skewed. We are taking all measures to increase our cash business and taking all necessary actions to reduce the trade receivables period.
Sure, sir. So just to add on to this, could you please share the proportion that we have as receivables? Is it entirely government receivables?
Almost all government receivables, boss.
Okay, and sir, what is the mix of cash and in our cancer hospital? The split between
basically in main hospital we have 50-50. In cancer hospital, we are still having more than 90% cashless business, and we are trying to achieve 30% cash at least in cancer.
Okay, sir. This helps. I have another question regarding. I just want to get a little more insight on the education business side of things that we're planning to go down on the road. So, could you just share a little bit of strategy and maybe the capex that would be required? How will we fund it? A little insight on that could really be helpful.
First of all, basically, we are trying to maximize the investment already made. We already have building infrastructure. Hostel we were not having, which we have already constructed. Because when you are running a hospital, you require huge manpower because it's a manpower dependent industry, and that is why we are trying to run some paramedical courses, and we are trying to bring in nursing courses and a few other courses which is achieved without much investment. So we are not looking for huge capex investment at this moment, unless or until we add something which is going to generate huge revenue from that. But so far, today is concerned, we are not aiming for huge capex investment, though we are trying to bring in different type of courses with the help of collaboration, with the help of strategic partnership.
Sure, sir. Could you just clarify on this? What kind of expenditure have we already done on the hostel, or if you're planning to incur on it?
Approximately 4 crore rupees has been spent on hostel, because hostel is needed for your manpower also. You have plenty of people, they need to reside nearby. So you need hostel. In any way you require hostel. So we are trying to create a mix. Plus, when you have some education kind of revenue stream, you get money upfront. So it creates ultimately some kind of balance. So that is the thought process behind it. Plus, getting quality manpower. Manpower is available for certain period of time until or unless they are continuing with the course. They get training in the hospital. So that is how we are trying to organize.
Sure, sir. This also helps. I had another question. We are also planning to expand our current capacities for a super specialty hospital. From what I can see, we are planning to expand it to around 350 beds. That depends on the demand, and planning to also expand our cancer hospital from 650 to 65 to 150 beds. Yeah. So can you could you please share some kind of capex or the funding?
Again, in the last earning calls, we had explained this also. Again, we are not going to invest huge sum of money. The construction of major portion of that additional 65 beds in the existing unit is already done. Hopefully, we should be operational before March. And in the cancer hospital also, because civil infrastructure is already in place, we need to put some equipment, and so there will not be major investment more than 3 crore rupees in the entire process.
Okay. So just one final question I have. As we have heard that we have done partnership for the multi-organ transplant unit. So from my understanding, we've already given them a floor of ours, but I just want to know, is it operational as of now? Or
no,
are we yet?
It's an agreement signed, MOU signed with them. We are collaborating with the state government, because here the organ transplant policies are not very clear. But hopefully we should be making bone transplant facility operational in next year.
Okay.
Bone marrow transplant.
Okay, thank you very much. I have a few other questions. I'll join back the queue. Thank you.
Thank you, sir. Thank you very much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Runeet Kapoor from Investar Investments. Please go ahead.
Yeah. Hi. Am I audible?
Yes, Mr. Kapoor.
Yeah. So I want to understand, like last time you had stated that you are planning to add a new 100-bed capacity hospital. So any update on that aspect?
Yes, sir. We are trying. There were certain technical glitch. There are some shareholders of the identified unit had died, and the share transfer was not taken shape, and that is why it got delayed. But we are still trying, and we would like to close it quickly as soon as we hear update from them.
Okay. And one more thing was, like, I think the promoter entity also has one hospital, it is not in this entity. So any plans on merging that, or like what is that?
Yes, sir. We are planning to merge that. We are discussing with the consultants to process that merger.
So the merger would be like it'd be a cash-based transaction or based on share valuation of equity?
No, sir. It will be on swap basis, cashless basis.
Okay. So and it is expected to be closed by this year?
Hopefully, it should be done, sir.
And just to understand, like specifically how much revenue and EBITDA does that hospital do?
That details we will. I request you to kindly send a mail so that we can fetch out the details and send you.
Okay, fine.
Okay.
Yeah,
Thank you, Mr. Kapoor.
Yeah, I just wanted to understand one last question was regarding your super specialty mix. Like, how has it changed compared to last year? Like, is it no?
No, in the super specialty mix, if we talk about the only super specialty hospital, cardiology remains on the top, then neurosurgery, then medicine, orthopedics. So there is no much change because cardiology always remains because the stay period for cardiology patients are low and revenue generated per patient is high. So cardiology remains on the top, and there is no much change in the revenue mix.
Okay, fine. And thank you. That's it from my side.
Thank you, Mr. Kapoor.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Sarthak Kumar, an individual investor. Please go ahead.
Yes, sir. Am I audible?
Yes, Mr. Sarthak, you are audible.
I want to know how much revenue are you expecting in full year FY26 and FY27, and your PAT margins at both end year?
Sir, as we had already given in our presentation, we are looking for a revenue of 160 crores, and PAT will be somewhere around 13 to 15%.
Come again, sir? Couldn't get you.
Already given in the presentation, we are looking for a revenue of 160 crores and PAT margin of 13 to 15%.
And for next year, sir, FY27?
It is also given, sir, 200 crore revenue we are looking, sir.
Any increase in PAT margins or same?
That depends on many factors, so it will not be, but definitely our aim will be to improve, but there are factors which affect. So that is why we are not committing something, but definitely we would like to improve on that also.
Any specialty thing you are adding in the hospitals, or the number of beds are going to be increased? Any acquisition in nearby city?
Number of bed is going to increase. Already steps are taken. Hopefully before March we will be. And with regard to acquisition, we are already discussing with few hospitals. So any kind of strategic partnership materializes, we will be going ahead. As we continue to increase number of beds under management.
Okay, sir. Any idea to focus towards Hazaribagh, Koderma, or because Ranchi is very nearer to that, and there are many good hospitals in Ranchi. So, any thought on that?
Sir, when we decide and choose location, we choose on the basis of railroad connectivity, air connectivity, availability of medical college, and the potential of the place. Hazaribagh, so far as I know, one hospital is coming up, but it is very difficult to bring doctor to that location. So at present, Hazaribagh, we are not very sure, but we are definitely looking for a place where you are able to attract and retain doctors. So there are factors which affect your decision, because opening a hospital requires capital, but running a hospital requires expert, talented doctors. When a doctor comes, family comes, and family comes with problems, where they will study, how they will do shopping, where they will get entertainment. There are lots of, problems when you attract a doctor. So after considering everything, we will be deciding. But Hazaribagh and Koderma is not on the immediate consideration.
What about Bokaro?
Bokaro, there is a hospital which is struggling, and Bokaro has already SAIL hospital, more than 500 beds. They are not doing good. There are also private hospitals. So Bokaro is also nearby, and people who are, our name is very much known in Bokaro. There are lots of patients comes from Bokaro. Bokaro is just 45 kilometers away, 35 to 40 minutes away from here. So Bokaro patient we serve from this existing location.
And sir, what about your testing facilities? Do you refer your test to higher medication centers?
We have one of the strongest investigation facility. We are very much well equipped with all doctors. So majority of the tests, which is not very specialized, are done in our own center in the super specialty wing.
Okay, sir. Got it. Thank you.
Thank you, Mr. Sarthak.
Thank you. The next question is from the line of Rahul Misra from RTL Investments. Please go ahead.
Yeah, thanks for taking my question. Just on the cash flow, you mentioned that because there are a lot of government payables.
Yes, Mr. Rahul, please go ahead. Yes, I can hear you, Mr. Rahul.
The connection of Mr. Rahul has been disconnected. We will take the next participant. The next question is from the line of Ritika from Perpetuity. Please go ahead.
I just had a question on what is your current payer mix in percentage?
Can you explain your question? Payer mix means?
Government payer, insurance, cash.
Insurance is 8%. Government is 30% plus. Cash is 50%. In cancer hospitals, government scheme contributes 90%. 2% insurance, and 7-8% cash.
Okay. So your debtor days, do you see reducing because of the government mix is quite high?
Yes, because of government mix, it is quite high. This is an identified area. We are working day in and day out to manage this in the best possible manner. But because government payments are almost certain, so it may take some time, but it gets done. So there is no risk involved, but definitely we would reduce the timeline. Our Vice President Operations, Vice President Finance is looking after the matter very seriously with his entire team, and hopefully we will improve.
Okay. Thank you. And also one more question, if I can.
Yes, yes.
So, you are you in panel with all the insurance agencies?
Yes, most of the insurance agencies we are empaneled.
Okay, thank you.
Thank you, Ritika.
Yeah.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Murtaza from Pinpoint X Capital. Please go ahead.
Hi again, sir. I had a couple of more questions, if you could help me with. Could you kind of give me a rough estimate of number, considering our acquisition goes ahead, and what kind of beds are we expecting by the year end, FY26?
Sir, we are trying to come close to around 500 beds. We are taking all measures. Plus, apart from that, we are, focused on revenue and profit. Cancer Hospital is new unit where we have invested lots of money. So our main focus area is to ramp up cancer operation. So bed-wise, definitely we are looking for increasing number of beds, and 500 beds we target. But more than that, we are focused on our revenue projections and other financials. So,
okay. So is it yeah? So is it 500 beds like on an average by FY26? Am I correct?
27.
This is what we are doing.
27, sir.
27. Okay.
Yeah.
Okay. And another question I have is that are we considering the revenue of our the multi-organ transplant unit in our 160 crores of projection?
No. It is, as I said in the last question, while answering last question, this MOU is in place. We both partners working jointly and collaborating with the state of Jharkhand to make some modifications so that the organs are available. The organ donation policies in Jharkhand is not very clear, so it has become very difficult to procure the organ, whether it is cadaver organ or a live donor. It becomes difficult, so we are collaborating, and I don't think that we are projecting any revenue from that collaboration.
Okay, so from my understanding, it is something because of the lack of regulatory clarity. Is that something we are not adding it? Okay.
Yes.
This helps.
Yes.
Yeah. And I had another question. There was a slight downtick in the general medicine mix. It came down a little. So is there some kind of a insight you could share, or is it just
sometimes it is affected due to seasonal issues. There is no other concerns in that.
Okay. Okay. And could you it's a little bookkeeping of question. There was a slight a dip in the depreciation year on year if I see with H1 FY25 and the current H1. So is there some reason to it?
Life-saving equipment attracts a depreciation of 40%. So, once your equipment depreciated by 40%, major equipment, Linac, depreciated by 40%. So, there is a downturn in the depreciation.
Oh, okay. And sir, could you also additionally share some insights about the bone marrow unit that we are planning to establish?
In Jharkhand, there are lots of cases of thalassemia and blood disorders. We already have a full-time hemato-oncologist on board. We are coming up with the infrastructure needed for the bone marrow transplant, and we have already applied for the requisite permission. So hopefully next year we will be commissioning our bone marrow transplant unit.
Okay. Okay. So it will get operational by next year. This is something we are trying to.
Yes.
Okay. And sir, could you if we go through our acquisition and hopefully by God's grace it happens, so can we see some kind of synergies in revenue and some kind of incremental revenue?
Definitely, sir. Definitely. Because the merger we are talking about, not only operational hospital we are looking for some brownfield projects also. So definitely there will be synergy and movement in the revenue because of the acquisitions.
Okay. And sir, could you please share the size of earlier there was a question about a merger of a hospital of a promoter entity. So could you please share the bed capacity of that hospital?
70 beds.
Okay, 70 beds. So if roughly, if we are able to execute the acquisition and our the promoter entity hospital, we can roughly reach to 500 beds this year itself. Provided
it is quite possible, sir. Quite possible. Consultants are in place. They have been instructed to do so. Because lots of permissions are required, lots of regulatory approvals are needed. So they are on the job.
Totally understandable. And sir, one final question I just have. Can you please tell the typical payment cycle that an insurance company has and a government has? The government agencies?
40 days to 60 days insurance company takes.
Okay.
And different government agencies has different payment cycles. But it is 90 to 180 days.
Okay.
It takes.
Okay. Thank you very much. These were my questions.
Thank you, Mr. Murthy. Thank you very much.
Thank you.
Thank you. The next question is from the line of Ashish Soni from Family Office. Please go ahead.
Sir, regarding this cancer hospital, you said the people trust is not there. So what are the steps are you doing to raise awareness and trust in that hospital?
For awareness, we are doing regular camps. For awareness, our growth and development team is size of the growth and development team has been increased by doubled. Now 16 people are working in the department. They are meeting all neighboring districts, practitioners, doctors. Our wall painting, hoarding, our Facebook boost, our social media platform is being used. We are trying to have a video shoot of all those doctors who have good experience after sending patient to our hospital. They are recommending our hospital on 45-second video. We are trying to boost those videos. So we are taking multiple steps to increase credibility and awareness. Problem is whenever anybody hears information that he is having or suffering, his family member is suffering from cancer, they try to go to best known cancer centers, and generically they rush to Tata. But we know that because we are into the business, we know that cancer treatment is a protocol-based treatment, and there is no much difference. We have already hired our surgeon from TMH Mumbai. We have all cancer specialists from good metro cities and from good institutions. So protocol-wise, there is no difference. But it is about perception. We are trying to build credibility through building perception with the help of the doctor recommending to go to visit the center in case of need.
Okay, and what are the other competition for you? Which are the areas from which you get maximum patients? Because I think you mentioned Bokaro. So, and what are the competitive hospitals around that area where maybe you are indirectly competing against them in terms of referral price for the customers? Just give a broad overview because we are not aware of that area.
Dhanbad has 6-7 districts nearby. So initially, before cancer hospital, our 95% revenue was coming from Dhanbad itself. When we ramped up our reach to other districts, the nearest district, which is Giridih, it is now contributing 10%, and we have made a target that Dhanbad should not contribute more than 50%, and at least 4 districts should contribute 10%. So our focus area is Dhanbad. Focus area apart from Dhanbad is Giridih. Then Jamtara is a focus area. Hazaribagh, Kodarma, Bokaro, Dumka, all these neighboring districts are on the target list.
And your ambition is to increase PAT margins from 9% right now in H1 to almost 13-15. So what are the steps you are taking to increase that?
We believe that on cost front, we are working hard to bring down the cost. We are trying to modify the contract with the doctors without disturbing our relationship for all genuine reasons, because our receivables are not in a good shape. We clear our dues with the doctors every month, even for the cashless patient also. So we are trying to modify that. We are trying to seriously look into and control the cost, overall cost in every area. We are trying to reduce the cost of purchase of pharmacy. In corporate patients or cashless patients, we are using the same brand of medicine, whereas we receive letters from ECHS, CGHS, ESI that you have to use generic medicine, where we feel that there will be some increase in margin. So all these steps will help us to improve our PAT.
And regarding capex for the 200 beds, so how much approximately capex will you require, and when it will be complete tentatively?
Before FY 2027, it will be complete. With regard to capex, I don't think that will be more than 10 crore rupees capex needed, which will be funded through internal accruals.
And you touched upon the manpower being the core of our business. So what is the typical attrition percentage in your hospital, and how do you ensure the retention of the doctors or the staff is taken care of?
I appreciate your question because this is the main question of running a hospital. With regard to doctors, we attract doctors, we select doctors on the basis of first capability, second region as to why the doctor wants to come to Dhanbad. So we analyze their family, their connection with Dhanbad, then their motive of coming to Dhanbad. There are many doctors who have some kind of connection to Dhanbad. Some doctors having parents settled in Dhanbad. Some doctors, majority of the doctors, we look for doctors whose wife has a strong connection with Dhanbad because those type of doctors are our easy targets. When wife is there, chances of coming to Dhanbad increases. So first is this as to why they come to Dhanbad. Then second important aspect is how we enter into contract with the doctor. What kind of offering we make. What kind of liberty they look for. What kind of environment you create, overall conducive environment if you make for them to work. So this is for the doctor. Now for other staffs, as you know that nursing is the major challenge, but because of our long standing in the market, timely payment, trying to make fair payment, we are able to attract other staffs also, including nursing. But still, the question is, what is the attrition rate? Attrition is somewhere 20% plus, rather 20 to 30%, which is manageable, but we aim to bring it down by modifying our HR policies. We are reviewing our HR policy. We are trying to make necessary changes in the HR policy. Plus, we are trying to improve employee engagement so that we are able to reduce the attrition. With regard to attrition, I personally contacted many hospitals in metro. HR people are saying that you are just wasting your time. Attrition in this healthcare field is, lots of people joins us at a very young age. So a nurse joins and she gets married. So she moves away. A nurse joins and after some time she gets a government job. She moves away. So that is why the attrition increases. Attrition is mainly in the nursing field because they are most volatile. So we are trying to have some kind of HR policy in place so that attrition is at least, if not less, it is not more than 20%.
One last question. If at all you want to expand in future, so will you expand only in like Jharkhand or nearby state, or do you want to get into UP and West Bengal sort of thing also?
So we are looking for expansion in Eastern UP, Bihar and Jharkhand.
And tentatively, what's your futuristic plan in that area, like bed capacity in like 3-4 years?
We are looking for brownfield projects where our capex requirement is little comparatively lesser and where turnaround time gets reduced.
But tentative bed capacity only, how much?
By 2027, our total bed capacity is projected to be 500 beds.
That is okay, but 3-4 years down the line, if you want to expand into UP and others, what you spoke about, so how much?
Sir, definitely we would like to aim for a 1,000 bed company.
By which year?
It is not exact, but definitely before 2030.
Okay. Thanks and all the best for the future.
Thank you, Mr. Soni.
Thank you. The next follow-up question is from the line of Ratika from Perpetuity. Please go ahead.
Hi. I just wanted to know, like, what kind of ARPOB do you see in your hospitals? And also the loss for especially cancer hospital is quite high at 7 days. So any optimization over there? And since you have a lot of government patients, then are you getting a benefit out of this CGHS hike that has happened?
First of all, definitely CGHS hike will benefit, but the result is yet to be seen. CGHS, there are many entities of the government which has not yet implemented CGHS rate. They have already sent a mail that by so and so date, somebody has said that by 31st of December we will be implementing CGHS rate. So definitely CGHS impact will come. With regard to what other question did you ask, Ritika? ALOS. You asked about the ALOS. ALOS in the cancer hospital is 7 days because the cancer patients when gets operated, they are required to stay for a little longer period of time. We are trying to get first-hand experience as to how much should be the standard LOS. But definitely our aim will be to bring this loss down. And third question.
I was asking on the ARPOB growth, like what kind of growth are you seeing?
We are trying to match with the industry, and that is adjusted with the local condition. So exact ARPOB. Yes, exact ARPOB, we are trying to improvise the process. We are trying to improvise our billing mechanism. We are trying to, it's not about, just trying to serve patient with a profit and with ethics also. So, exact number I will not be able to tell you, but definitely after experience we try to learn and try to improve. So definitely there will be some, suppose we are looking for a capacity expansion or bed expansion in the cancer hospital. So once suddenly cancer hospital beds are more increase in number, so ARPOB will drop. But definitely we would like to ultimately improve ARPOB in future.
So your projection for 160 crores revenue, you have taken only the impact of what occupancy incrementally you will get from the beds, not the ARPOB.
It will affect everything, but definitely ARPOB will improve marginally because the area in which we operate, there is a cap from CGHS also that you are this kind of city, so we will not pay more. So definitely bed utilization will increase on the revenue and profit.
Okay, makes sense. Thank you.
Thank you, Ritika.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to Mr. Harinder Singh for the closing comments. Thank you, and over to you, sir.
Thank you very much. On behalf of Asarfi Hospital Limited, I thank you all very much for joining this conference call. And by this concludes our conference call. Thank you very much.
Thank you very much, sir. On behalf of Asarfi Hospital Limited, that concludes this conference. Thank you for joining us today, and you may now disconnect your lines.